Too many fucking discords. Big surprise. All right. What's happening, people? Mitch, Maz, Trader Goo. I'm guessing your name is in Mandarin. I don't speak Mandarin, so konnichiwa. If that's racist, you can just tell me. I'm not sure. So we'll give it a few minutes here for everyone to join up before we get into anything too crazy. See how popular I am. Yo, what up, Eggsy? Daniel, how you doing, buddy? What's going on, Jose? All right, 43 people. So we'll give it just 4 minutes here, and then we'll just kind of jump right into it. So how's everyone doing so far? Everyone having a good 2019? You all sticking to your New Year's resolutions? You guys still going to the gym and eating healthy and all that shit? John Travolta, what's happening, man? Welcome. "21 days in, so I feel like now's the time of year when, or the time of the month when people are starting to fall off of their New Year's resolutions already. So hopefully you guys all stick in yours. Good to hear. I'm still sober as fuck, so it's been interesting. The good news is I don't need weed and booze to get a buzz on. You know, I can just go on BitMEX and 100x long with no stop has basically the same effect. You know what I mean? Justin, what's happening, buddy? Shrek, what's going on, bro? All right. We got a pretty good showing here so far. So, what's happening, AJ? Once the clock hits 5 minutes here, I'm just going to jump into it. So, yeah, the way we're going to, yeah, exactly. Enjoy that beer for me, buddy. Get yourself a doobie as well. And smoke that and then tell me how good it is so I know what I'm missing. So, you started to smoke. There you go. That's an interesting resolution. All right, guys. So here's how we're gonna structure. Well, first of all, welcome back to a market breakdown, a live stream with Trader Mayne. I know it's been a couple months since I've done one of this for you guys. I'm sorry. I've been busy. I've been grinding. Uh, I've been working, and shit happens. But I'm glad we're able to connect here, get a stream going. I'm gonna try and make this maybe, once every other week, or at least once a month for you guys, because I still want to connect with you guys. All of you guys who are my followers. VLX, what up, dog? You guys are the reason I am in the position I'm in the community, and I appreciate that very much. All of you guys who have been following me. For months and months and months, and supporting me, my posts and my content. I can't be anything but grateful and thankful, excuse me, for all of you guys. So thank you very much. And I like to provide this free content for you guys because I like to help out the community that has done so much for me. Just you guys are like my friends, so I appreciate all of you. So um, let's jump into it. So what we're gonna do today, we'll go over Bitcoin, we'll go over Ethereum, okay? We'll go over XRP, and then because those are the main three cryptos I trade, um, for obvious reasons, because everything else is shit. They're all shit in my opinion, for those of you that know me long enough. But these are the three I personally trade that I'm confident my bag is not going to go to zero when I wake up in the morning. And then I'll take requests on anything that you guys want me to chart, any coin, stock, currency pair, whatever you guys want. I will chart it for you. I'll give you all my levels and some potential trade ideas that I could see forming. And then what I'm also going to cover is I'm going to give you guys a strategy. I am going to do a very quick breakdown of just a very basic strategy to enter a trade. And here's the reason why. Look at how ugly this is. One of the hardest things to do in trading is actually executing the trade and then managing the trade once you're in it. And so what I mean by management is executing is obviously getting in the fucking trade, right? And then when I mean management, okay, once you're in the trade, how do you manage your emotions? When prices, let's say, just for illustration sense, right? The price is coming, boom, your trade triggers. How are you managing your emotions here, right? When it's below your stop. How are you managing your emotions when it's above your stop, but it's not going to target yet? So how do you manage that, right? The second part of managing a trade, beyond the emotional aspect of it, is the actual management of the trade. So if you're in a swing trade, right, where it's, you're trading a long trend, right? Well, let's say you enter here, right? And then are you trailing your stop up as it continues to make new highs, right? You're trailing your stop up. Are you taking profits here, right? And then when it comes back down here, are you adding to your position, right? So that would be also part of trade management. And then obviously, the taking profit and the shit like that, that all comes into play as well. So one of the things that people miss, especially on crypto Twitter, and the problem is everyone, the most popular accounts, and I'm guilty of it too, make nice, clean looking charts, right? It's all about that chart aesthetic, right? That's what everyone's interested in. They're like, oh, I want to have the cleanest charts. They're going to have the coolest color theme, blah, blah, blah. And I'm not trying to call anyone out. I fucking do it too. I like to have my nice, clean lines. That's why I like price action, right? It's nice. It's clean. There's no clutter. There's no fucking indicators everywhere. It looks good. It's pleasing. But being good at drawing on the charts means jack shit if you can't actually have actionable data off of the shit that you're charting. So if you're marking all these levels and you're like, oh shit, well look at this. What I did is I marked this level here, and then I marked, or here, let's go the weekly. This will be better. Like let's say you marked, this level here. You're like, oh, this is a great SR level right here. Right? And then look how perfectly we rejected from this level here. It's like, okay, that's great. Did you short it here? Because if not, it's just a fucking line on a chart that means nothing, right? So like not only do you need to be doing the TA, right, is the easy part. And the problem with crypto Twitter, my whole point is you join Twitter and you see all these people with these nice ass charts. And first of all, you don't know whether or not any of these people trade. It's very rare that there's people like Jewel, who's one of my favorites, who are posting, a live stream of their fucking computer 24/7, showing their BitMix account live and their trade log, etc. Most people don't do that because most people are LARPing, is the popular term, right? They're lying, they're faking it. Who cares though? I mean, crypto Twitter's obsession with what everyone else is doing is hilarious. It's like, why do you care whether or not someone else is trading? right? Who gives a fuck? Worry about your money. Are you actually trading? That's all that really matters. Who cares what everyone else is doing? But my whole point is you come on a crypto Twitter, you see all these accounts with nice charts, and everyone wants to become a TA artist, and everyone wants to draw the perfect order block and the perfect SR levels, and they want to have the best color scheme. But they skip over the basics. What TA is the easiest part, maybe not the easiest, but it's one of the easiest parts of trading. It does not take a fucking long time to learn how to draw a trend line. It does not take a long time to learn how to draw out the fucking order block, right? And just say, okay, well, here's your OB, and to draw it out. This stuff does not take long. Or the fibs, and be like, okay, well, from here to here, you got a nice range, or you got your 62% retracement right here, right? The OTE, like that shit's easy. It's like, okay, with this information that TA is giving you, are you actually able to make actionable trades off of that? And that's one of the things that you need to learn. How do you actually enter? How do you actually define your risk? How do you actually pick targets? How do you actually get in the trade, get out of the trade? How do you manage it along the way, trailing your stops, scaling in, scaling out, adding, blah, blah, blah. All of that stuff is skipped over a lot in CT. I see a lot of people who draw really pretty charts, but I don't know if they trade or not, and I'm confident a lot of new people come in and they want to learn how to do TA instead of learning how to trade. If you ask any of the best trading gurus in the space, they're going to tell you what's more important than TA. You can have the best TA in the world. What trumps it is good risk management, trade management, and sound psychology. So all of that shit is way more important than being able to draw on a chart. Because if you can't actually enter the trade, like, okay, price came to your level, well, now what the fuck do you do? What are you looking for to actually get in? Your fucking lines and your pretty charts and your TA is all useless, okay? So I'm going to show you guys a very simple, basic strategy that you can use to enter trades and to manage them. It's kind of like it's a swing trading strategy is what I use it for, but it can be applied on any time frame because price is fractal, meaning that your high time frame can be the weekly, and then you can enter on the daily and the 4 hour. That's a swing trade. Maybe your high time frame is the hourly, and then you're entering on, or your high time frame is a 4 hour, and then you're entering on the hourly and the 15-minute. That's more of a day trade. Maybe your high time frame is the yearly, and and you're entering on the quarterly and the weekly, and that's a position trade. Whatever, it can be applied wherever. I'm gonna give you the basic framework of it, how it works, and then you guys can go and back test it in hindsight, figure out how it's gonna work for you, and then apply it in your own charts, and then you'll actually have a thing where you can, the beginning of a strategy. So that's kind of the outline for this video. So we'll do that. Any questions you guys have? In the meantime, I'll do my best to answer. I know some people had some questions about some paid group gurus, etc. We can talk about that as well. I mean, it's funny to me, right? Like the amount of paid groups that are opening at like 3,000. Like, are you kidding me? Like at least here, it made sense because anyone with half a brain could pick an altcoin and it would go up, right? Like you could long anything here, including Bitcoin, and it goes up and you look like a genius. So everyone was opening paid groups. So the fact that people are now opening paid groups after the market is getting this much crushed, it's like, okay, well, do you have a track record of shorting the entire bear market? Because if you don't, what the fuck are you doing trying to teach people? I have a paid group. I don't try and hide that at all. The common chirp that you get in crypto Twitter, especially, is, well, if you have a paid group, why do you have a paid group if you can't trade? If you can trade, right? It's like, okay, well, that's the dumbest thing I've ever heard. Just because I can play guitar, does that mean I have to teach you how to play guitar for free? I've spent 10,000 hours learning how to play, but now because I know how to do it, I have to go on YouTube and teach everyone for free? It's like, of course not. I enjoy teaching. That's one reason why I have a group, and also why I do sit for free. It's risk-free money, meaning when I'm trading my own money, there's risk, right? There's less risk in me making content and having people pay for that content, right? Completely different ball game. Don't do anything you're good at for free. 101. And all of the best trading materials I've ever consumed have been paid, whether it was ICT's mentorship, Trader SZ's paid group, Chris Laurie's webinars, Tom Dante's webinars, WMD4X's webinars. I've paid for all of that shit. I've spent probably over almost 10 grand on educational trading content, and that has paid me back tenfold easily. So I have no regrets about that. I think that that being said, everything you need to learn to trade, you can learn for free if you're committed, you're willing to dig around, find the good shit. If you're willing to actually put the time into the charts and back test strategies and work it out for yourself, you can learn for free. So when you see some of these people who have been on Twitter for 6 months opening a paid group, talking about trading psychology and like how they're going to teach you about funding and how you can use it to maximize your gains, like fuck off. Like you can learn that shit for free. Go read Trading in the Fucking Zone. Go read BitMEX's info page to learn about the funding. Just ask someone. Aurelius has great threads about it. There's tons of free shit. Crypto Cred has enough free content for anyone to go from like absolutely nothing to like marking up the charts and being able to make an actionable trade and do risk management. So you don't have to pay for anything if you don't want to. I said there's value in paid groups if they're good, if they have a proven track record, and if you enjoy the way that that person teaches, there's definitely value in there. But you don't have to pay for shit. And there's a lot of people on Twitter who is very obvious should not be charging for anything. And I think most of you know who they are. And if you don't know who they are, just ask me and I'll fucking throw them under the bus. Everyone following along so far? All right, cool. Satoshi Wolf, what up, my dude? Close weekly candle. What are you talking about, bro? It's Monday. You want me to talk about the weekly close? So I've begun to find what works in Bitcoin. Just pure interbank, which is pretty depressing. But yeah, you can know who you win when you're on this other side. All right, so yeah, let's get into it. I'm not eating anything. That's my water bottle. So I'm going to mark up my Bitcoin chart from nothing here to all the levels that I'm focusing on right now. So let's start with that. So what everything hinges on, and I talk about this all the time for you guys, is forget your order blocks, forget pivots, forget all that shit. The first thing you need to get competent at doing is drawing support and resistance. Okay, so order blocks, key levels, all that shit hinges around support and resistance. So I'll start on the highest time frame here. I know this looks stupid, but what I'm doing is I am going to mark the yearly open 3693. Okay, that right there is the yearly open. So there's a few types of support and resistance levels that are, can I write text on here? What? Yo, is that how everyone gets their text to show up on the side? I'm so fucking bad at TradingView. So there's a few types of different support and resistance levels, okay? I call them, and I'm not coining this term, this is just how I interpret them. There's literal support and resistance, right? So it's the ones where you have your chart open and you find a level that price is interacting with and you're like, okay, this to me is a good SR level, right? Support, 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 right? And now we can assume it might be resistance, right? That would be a literal SR level. And then there's other ones that I call implied SR levels. So these are going to be things like your yearly open, your monthly open, your weekly open, the weekly close, the big figure numbers. So 5,000, these are like psychological levels, 6,000. These are all going to be also what I call implied support and resistance levels. So the whole point is mark up your chart with support and resistance levels before you worry about finding order blocks and any of that fucking shit, okay? First things first is support and resistance levels. So the yearly open, we just started a new year. Very key level in my opinion. And if you even just look at the daily, this is when the year started, right? So this level became a level right here. Look at how it's support, support, resistance, resistance, but go back in time. Resistance, support, resistance, support. It's support here, support here, resistance here, support here. So I drew that level from January 1st, 2019, but even in hindsight, the level is a good fucking support and resistance level, okay? So this is a good level to watch. I'm liking this level right now. This is the level capping price. So any sort of bullish argument I am going to make is going to hinge around this being an area of resistance. And if we get above the yearly open again, I think we'll see more upside. Simple as that. So that is the first level I'm going to mark. On the monthly, I don't think there's really anything else we need to mark. We could mark this kind of like 4,000 level. And we could mark, I guess, this level, but we're nowhere near there. So, right, the way I like to do levels is I like to do recency, meaning how long ago was it a level that was interacted with, and then proximity to price. If we're not close to the level at all, right, like this might be a good SR level up here. This is at 7,000. We're trading at 3,500. It's pointless for me to clutter up my chart. When you see these people with a fucking 1,000 lines on their chart, drives me nuts. It's like, of course, price is going to hit one of your level. You have a level every $100. So, I'm going to just finish marking the chart up, and I'll come back and read these questions, guys. So the yearly open, definitely a level I'm watching here, okay? On the monthly chart, nothing of interest to me right now. The weekly chart, this is where our first key level that I'm going to mark is here. And it's going to be the top of this weekly candle, which also happens to be, yes, a weekly bullish order block. For those of you that are new, that don't know how I trade, one of my main mentors was ICT, okay? So he is the guy who coined the order block term. The down candle, okay, before the up move, you want to see a down candle that led to an expansive move away for it to be a bullish order block. A bearish order block is the opposite, right? So it is the up candle right here before an expansive move way to the downside. You mark that candle out, that would be your bearish order block. So this was technically a bullish weekly order block, but instead of marking the entire block out, I'm just going to mark the top of it. That's where our level of interest is right now. So far, on the weekly chart, I have really two levels that I'm paying attention to. The next level I would mark on the weekly chart is, this is what? A bearish order block. If this is a bullish order block, this would be a bearish order block, no? But I like the top of it as a nice SR level as well, right? Resistance, 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 resistance. We have not closed a weekly candle over 4096 since November, okay? So that's a significant level of resistance to me on the upside. So now I have some support and resistance levels that I can now start building around and looking for setups. So as you can see, just with those three levels, look at how nicely we've bracketed off price, right? You could draw a range. There's so many different ways that you can accomplish the same thing, right? I could use a range here from this high to this low, okay? And that could be my SR here. I'm going to just do this real quick. Right? It accomplishes the same thing. Now we have an area to work within, because you can't just start drawing order blocks in the middle of nowhere. You need to hinge them off of key high time frame levels. Okay, that's super key. So anytime you're looking for a setup, at least how I trade, I'm hinging my trade setups and order blocks and the breaks in market structure. All of that shit hinges off of me finding high time frame levels that price is interacting with. Okay, so I'm just gonna reverse engineer this. For those of you who have not watched me stream in a while, I still suck at TradingView. Perfect. Okay. So, as you can see, pretty piss poor activity going on in here right now. But the next area of interest to me that I want to mark off is this level here. So this would be what we call a breaker block in ICT terminology. Basically, it is a level, right? An order block that's formed, right? It causes a down move that sweeps this swing low, okay? So we have this swing low that's been swept here from this move, right? So I have a lot of people who ask me about like, okay, well, is this the order block candle or is it this? Do you use the wicks? Do you use this? Don't worry about it so much. A better thing to focus on is the up move that led to the down move, okay? This candle is the up move that led to this selling. I could do this, right? So here's the same area in price. I could mark up this entire area as my breaker block. It's the same thing, and I could just combine all of these candles because this is the up move that led to the down move, okay? Same thing goes for the bullish side, right? So instead of just marking this exact candle as the order block, I could say, okay, well, this down move is the one that led to this move up. So I'm going to mark this out as my area that I want to watch. And of course, price moves away. So this is a thing that a lot of people don't do. They're super. So here's a perfect example. This is technically the order block candle right here. No retrace. You don't get an entry. If you're sitting there and you're like, I'm going to enter on a retrace to the order block, you don't get it. But if I say, okay, well, this down move, these 3 consecutive 4-hour candles, this is what led to the up move. All of a sudden, you have a nice area that acts as support that you can go away as, right? What is 3 4-hour candles, right? It's a 12-hour candle, is it not? So if I just go to the 12-hour chart, lo and behold, there's a 12-hour order block. See? Just highlighting those. And I just did it on the 4-hour because I've been doing this for so long. I don't need to be like, okay, well, this is the exact order block. I'm just going to say, well, you know what? This is the down move that led to the up move. That's what I'm going to focus on as my support area. And as you can see, it worked quite well, right? Perfect bounce. There's your move. And then when this support area, if I drew this out in time, look at how it acts as resistance on the upside here. Obviously, this is a huge range. I mean, it's not that huge. It's $150, but still, you get the idea. You don't need to worry about the exact candle. Focus on the down move before the up move, right? Or the up move that led to the down move in terms of selling, right? So is this technically the order block candle? Sure. You know, is it exactly this candle here, technically? Or do you just want to say, okay, well, this is the down move that led to the move up, right? And then when price broke through it, it retested and it sold off. So for those of you who ask me like, oh, what is it, this candle? Do you use the wick? Don't overthink it, okay? Focus on just catching the move in the opposite direction. So the up move that led to the down move. So to me, I like this level here because this is a potential breaker. Basically, a breaker is an order block that breaks market structure in one direction. Price nukes through it. When it retests, it goes away. So if you go on my Twitter and type in hashtag TM for Trader Mayne TA tips, I have like a nice infographic where I explain breakers with an example. This would qualify as a breaker. Okay, so this is the level of interest to me. Basically, this is like an invalidation level to me. I believe if we get below here, we should be concerned that we're going back to the lows. I don't know if any level below this level will provide a bounce, in my opinion. That being said, right now we are on weekly support. Okay. We have the yearly open here. We have weekly support here. So you know how everyone was getting their fucking panties in a bunch and about ranges? So here's your range. Right? Here's your range, deviation. Every fucking PA trader in the world now has a fucking range on their chart and has the Monday open and has the fucking EQ. Everyone used to have order blocks. Back when I was popular, everyone had order blocks and fucking shit on their charts with the EQ in them. And now everyone's all hot and bothered about the ranges. The best part is 90% of these people using this shit don't actually know how to use it. So it's the same shit, right? So I could mark this range out, Why? I have the exact same I have the exact same basically range marked out by just having the yearly open and the weekly support marked. So the key, what I'm trying to show you guys here, is what's more important than the fucking new hottest TA fad, the order blocks, any of that shit. Is just good support and resistance levels. If you get good at marking those levels, your TA game is gonna fucking increase substantially. So one thing you could do is you could take a fib from this support level here and draw it down to this level here. So now you have the equilibrium, okay, of this range at 63.10. I'm not going to do that because I don't want to clutter up the chart too much. But these are my levels of interest for Bitcoin here so far. So what I see is a area of resistance that is formed in the form of a new daily breaker right here. So this down candle that led to this up move that cleared out all of these stops, right? That is an area where if we pump, I think we could see a reaction. Okay, there's an interesting level here for me because from this level, this buying occurred. Okay, and then it got sold right through. So my thoughts are if we come back here, we might sell off again. So this is an interesting level to me, and it's the same level as this one here. Price basically just did the same thing here, right here, right? So it looks better on the 4 hour. We had this consolidation. I shorted this thing. I was like, this price here has no business going up from here. And I drew a stupid triangle on it. And I tell people, I'm like, okay, well, what are these fucking, everyone draws these wedges and these pennants. And they're like, oh, well, what is this? Is this a broadening wedge? Or is this a fucking ascending triangle? Or is this a fucking, fucking stupid, trilateral Pythagorean theorem formula? Who gives a fuck? All that this is denoting is what? We have lower highs, we have higher lows, and we have price compression. That's all that this triangle shows you. And you don't need a triangle to fucking tell you that. If you spend enough time in the charts, you can just start to see it. I could throw the Bollinger Bands on here, and guess what? The Bollinger Bands are going to be constricting right here because the range is getting tighter, right? You don't need fucking indicators or shapes to tell you this shit. I understand the use of diagonals. If you use diagonals to say, okay, well, a move has to happen soon, right? They're good for timing, right? A move has to happen soon. We're constricting, right? And the same thing happened here, right? A move had to happen because we were constricting. Price was getting in a tighter range. So that is the only time I'll be like, okay, go ahead, throw on your wedge, do whatever. If it helps you see that a move is coming soon, by all means. So we basically just repeated this move, right? We had price constricting. We ran the stops on the upside, cleared out all of these highs right here into where? This bearish order block right here. So here's some ICT fucking voodoo for you. If you mark out this order block here, and then you pull a fib from here to here, here's your 62.79 OTE retracement, right? Stop run into an order block, then it gave up the goat, right? And so the same thing basically happened here. We had price constricting. Same idea, right? Here's your cluster of candles. Price constricting, bullish move up, cleared out all the stops, completely nuked to the downside. If you want to pull your fib, I don't think this one is going to give you the OTE here, but it might. Pretty damn close, but not quite. So the OTE is not some magic formula either, guys. It's just a measurement tool, okay? It's just like a ruler. Price retraces, and a very common retrace after a move is 62% to 79%. So to me, right now, we have some decent upside resistance to get through if price is going to look more bullish. So far, we've broken market structure to the downside here, right? When this low gave out, we broke market structure to the downside. So what is market structure, right? I'm fucking so bad at TradingView. It hurts my brain. right? So when this high gets broken, this is a break in market structure, right? And then if this low gets broken, that's a break in market structure, right? Does everyone have a basic understanding of that shit? Hopefully, because if you don't, you shouldn't be trading with real money yet. So we've had breaks in market structure, right? Here's your swing low. We've now broken that to the downside. Here's another swing low. I mean, it's only been wick, but we've now broken that to the downside. So to me, when you're breaking market structure on the high time frame to the downside, that means I'm looking to short pullbacks rather than long, right? So that's why here we broke this. I long this move, okay? You can go back on Twitter and see, but the point is I also shorted this. And the reason I shorted this is because we're on the high time frame here. We broke market structure. So any sort of significant retrace to me was a selling opportunity. Right there into your 62% retracement. What is also there? Right into a bearish order block. So that to me was why it was a selling opportunity. And the same thing's going on here. I'm more interested in selling pullbacks, right? Like this one, right? And this one, pull back here, than I am longing. That being said, we are on top of weekly support right now, so there's no point in shorting at 3,500. The risk reward doesn't make any sense to short from here. You're better off waiting for some sort of pullback to get in on a short. Okay, so we've now mapped out price pretty well, just based on support and resistance, and then we have this one area that I'm watching, and I can even refine this to here. I like this as a potential short, okay? So the down move, right, that led to the up move. I'm sure you have some OTE confluence here. So I like a short up in this area here. If you're a supply and demand trader, this would be called your first trouble area, your FTA. It's all the same shit, okay? It's just under a different name. So these are the levels I'm watching on Bitcoin. We're on high time frame support here. So to me, it doesn't really make sense to look for a short yet. I think if this 4-hour order block here, which is confluent with the weekly support, I think if this breaks, that's your short signal. So to me, I don't think shorting here makes sense. I think if we break low here, then what do you want to see? You want to see a break in market structure. So there's your swing low. There's your break in market structure. The next pullback, that is where you short, right here. Okay, that's the short setup I would look for if we're going to break down from here. Alternatively, if we are going to go up from here, what could you see? Could you long this? Sure. The risk reward for a long is not super great, but you could. So if we have a break in market structure, this is the 4-hour chart. So for the 4-hour chart, the significant swing here is this level here. So if I see a 4-hour close through here, I would consider a pullback longable. So you could enter there, right? Where's your risk? To me, your risk either goes right below this red or it goes under here. Because, I mean, look at this is Arthur laughing in your face here. I mean, this is ridiculous. This is what? An $80 candle? I mean, that's what I mean. You run the risk of getting fucked unless you want to put your stop extremely loose, which would be down here below this level. But then where's your first upside objective, right? Let's say you enter here and you want to at least target there, right? To here's a 1-to-1. You're stopped out on this wick, right? I mean, I think this wick is done already, so it's already happened. But if you're going to put your stop here, the risk reward is shitty to your first area of, potential target, I guess. What I would personally do is wait for bullish market structure to form, which is exactly what I'm showing you here. I would like to see a 4-hour candle close above this level here, basically 35.50. If I see a 4-hour close above there, that I think you could long a pullback up into this level and you could have a tight stop on it. Alternatively, you could wait, right? You could wait for this level to break here. And then when it comes back here, that's an even safer long. Your stop now goes here below this swing low that led to the break in market structure here. So your entry is here. Okay, your stop is here. This is going to give you that tight risk reward on the long side. And that would be my suggestion for people trying to get long here. This would be the first trouble area for me. And then the yearly open is the next area of interest. If we blast through the yearly open, my next area of interest is up here. This cluster of candles here. Okay. That would be my next target. So this level, yearly open there, if you're a bull. Personally, I'm going to look for a short here. Now, I get a lot of questions asking, why don't I just put blind orders? Because I get fucking raped on blind orders all the time in crypto. Can I still say raped? Is that PC for 2019? I used to play a lot of Halo 2, and that was one of our go-to phrases. Oh, hold on. Look, I'm learning. Here we go. Okay, so that's the potential bullish scenario. For me, I'm not just going to blindly short this. What I want to see is when price gets up here, I want to see resistance met. So I would zoom in. I'll have an alarm on here, and I do on my other chart template. And then what I would want to see happen is bearish market structure, right? I'd want to see this. There's my break in market structure. There's my retest. This would be my entry, okay? And my stop would be here. And as you can see, the risk reward there is going to be killer, right? If I have this as my entry and this is my stop, right, above this swing high, I'm going to have at least a 5-to-1 back down to here. Even a 2-to-1 if I just go to these highs, right, or a 3-to-1. So personally, this is the setup I'm waiting for. I am long Ethereum right now from like not far, 116, I think. I think I'm long from here. Like 116. So I am, if we have upside, I have exposure. But personally, I'm waiting just to short higher, or I will short a clean breakdown of this level here. Okay. The other level reason I like this level, right, is it's this point of origin from here, right? This huge up move was caused from this point here. So to me, this is key. If this level gives up the goat, I think we're fucked. So is that clear for everyone? Yeah, Daniel Lind. We have actually a video on that where Scarface, Mr. TA, and I are all talking. It's in the video page. You just got to scroll back. How many times have I explained an order block? If I had to tell you how many times I explained an order block, I would fucking lose my voice. The thing is most people, no matter how much I explain them, they still don't understand them, and they still don't understand that they don't mean shit unless you know how to draw support and resistance first. Hopefully I just answered your question. I very rarely do blind orders in crypto. I find blind orders in Forex, I have a lot higher strike rate with. Like my trades don't get what I mean. Expectancy is probably a better word. I don't get stopped out as much. In crypto, you'll have a nice level, right? Like, here, I'll show you. Where's a good example of this? Like this. This is a good level. This is a down candle. It's an order block that caused this huge up move that ran all of the stops here. So if you set a blind order to long here, you're completely justified. To me, this perfect sense, right? Targeting at least back up to here. Absolutely nuked. It didn't even bounce, right? So that's way more common in crypto than it is in any other market. In Forex, I find that the TA is just cleaner, the levels hold better, it's easier to chart, it's easier to trade. So I'll set blind orders in Forex. I rarely do it in crypto. I usually set alarms and then I look for low time frame confirmation. And for me, the low time frame is the hourly is the lowest. Usually I'm on the 4 hour, and then I'll fine tune on the hourly. I don't really go to the 15-minute or any shit like that. Message redacted. My library coin had a mini moon? No fucking way. Oh, look at this. You want to know what sucks though? My entry is like fucking like way up here. I think I bought it like here or something like that. So this thing has to go like another fucking, it has to go like 10x from here for me to even be at break even. But nice to see that it got a little pump. Yo, what's up, Ben? So I've studied ICT. I've done his mentorship, all of his free content multiple times through. I've done Chris Laurie's webinars. You'll see a lot of similarities between those two. I've done Trader Dante's webinars, not all of them, but I think I've done like 2 of his modules. I've taken some stuff from WMD4X. I've paid for his stuff. I paid for Trader SZ's paid group for a while and his live streams. Yeah. I haven't read any books. I've read 0 TA books. I've watched a lot of free shit on YouTube. A lot of it's crap. The best teacher I've had outside of those mentors that I've just mentioned is Chart Time and just back testing shit. What made me long F? I felt like it, and I think the market structure was a little bit nicer in my opinion. What's happening, Tristan? When is the last time I had diarrhea? I in Colombia. So I don't know, 6 months ago, because I was eating all sorts of fucking weird food. I was on this island um, in between Panama and Colombia called the San Blas Islands, and I'm a picky eater. And you're on this fucking island. They take you out there on this boat, and it's like it's like it's like nothing there. It's like there's natives that live on these islands, and it's their own language, their own religion. They're like fucking Native Americans, but they're on these little islands. And so you go out there. It's like a tour, a trip, and you go out there. And we slept on this island, like on the beach in a tent for 2 days. And you can't be a picky eater out there. It's like whatever they catch, you're fucking eating. And so they fucking caught these. One day I'm sitting down and they have this fucking, I don't even know, there was some squid on there. It was nasty, but I'm just like, I gotta eat it. I gotta eat. So yeah, that didn't sit too well in my stomach. And the worst part about it is there was no running water. It's like a fucking island. I'm telling you, the island couldn't have been as big as a football field. It was probably smaller than a football field. And yeah, there's no running water. So you do the math there. Kazanomics is another major mentor of mine. Kazanomics is probably the first mentor I had in trading. He is the person who kind of got me from when I joined crypto Twitter in 2012, 2013. I had no fucking clue what I was doing. I was like a lot of people. I would just go on there. I would follow every big account, and if they said to buy a coin, I would buy a coin. But I was there for the first bull run, so I actually made some money. Just buying whatever these accounts told me to. But then when price started going down, it was bad. Obviously, I didn't know what I was doing, so I found Kazanomics. He definitely put me on the right track, learning about just understanding price action, and then beyond that, human emotion, the market cycle that you see, that market, the Wall Street cheat sheet. Kaz is you see that everywhere in Twitter, and everyone's trying to line up fractals with it. The first person to bring that to crypto Twitter was Kazanomics. I don't care what anyone says, all these Wyckoff people, all these fucking fractal people. Kaz is the first person to ever do that, and he was able to tie in market sentiment based on crypto Twitter and people's emotions into that. I mean, the guy just has an insane level of understanding of the markets, not just crypto, but the global markets as a whole. If you go on his website, you read his blog, there is shit that he's calling like the top and bottom of the US dollar, the top and bottom of gold, the top and bottom of Bitcoin and Litecoin, the top and bottom of the SPX. The guy is a fucking machine, and I've never seen anything like it. His accuracy, his precision is phenomenal. He's a legend, and his understanding of human behavior and psychology is bar none the greatest thing I've ever seen in trading, in terms of just being able to read the market based on the participants, and chart it with fucking pinpoint accuracy. It was nuts. So if you're interested in learning about him and joining his group, I would say fucking go for it. Definitely lots of value for the money there. So respect to Kaz. Big ups. What are your thoughts on Chris Laurie's price action material? I think it's great. You'll see a lot of similarities between ICT and Chris Laurie. A lot of Chris Laurie's stuff's a little outdated. But yeah, check out Chris Laurie's stuff. He's got some great shit. Yeah, TMTA tips. Hashtag TMTA tips. Any journal recommendations? So, I mean, it depends, Patico. If you want to have very complex journal that has a lot of actionable data, you can look at something like Edgewonk. Edgewonk is a service you pay for, but you have to enter all of your fucking trades in there. It's useless. So with any journal, it's only as good as the information that you put into it. So if you're not going to take the time to enter in your trades and then review the data that it generates based on those trades, it's going to be useless to you. But Edgewonk is probably the highest tech one, and it will give you all sorts of shit. Your strike rate, your percentage of profitable trades, what setups and pairs you're best at trading, the time. It gives you all sorts of useful data. I know some people have created some really good spreadsheets that give you some good shit as well. I actually use one that was shared to me from Trader Bandit. Big Bandit, whatever his Twitter handle is, shout out to him. He's a homie. So he sent me an Excel sheet that I use. I take a lot of screenshots and then I write notes on them on TradingView, and then I also use the TradingView idea function. But you should have some sort of Excel spreadsheet or handwritten sheet at the very least where you're tracking your trades so you can see your improvement. When it's most important is not necessarily when trades go right. It's for when trades go wrong. You want to be able to go back and analyze and say, okay, where did I go wrong? Yeah, Kazanomics is a beauty. Glad you're liking it, Vicorn. Sans Blas, yeah, that was it. Can you explain short you would take if we do run up? I don't understand the break in market structure from the top block. So it hasn't happened yet, right? You have to wait. So if price comes up here and we see weakness, imagine this block here is here. Oh my God. That was supposed to be a straight line. So price comes up into our level, right? Then we have a low form here. Then we have a lower high form, and then boom, this is a lower low right here. So any sort of pullback now is sellable. That's a break in market structure happening right there. This, right? You have a boom. There's your break in market structure right here. Any sort of pullback is now sellable. Stop goes here. Right? That's what you're going to look for when price comes here, if it's going to dump. Right? Same thing here. Let's do another example. Did I just do this or here? Look, exact same shit, right? Price comes up to the yearly open. Boom. There's your level, right? Swing high. There's your break in market structure right here. When this low gets taken out, there's your break in market structure. Look, it pulls back perfectly. That's your sell. Your stop goes here, right? And look at how perfectly that one worked out too. It pulled back into where? It pulled back directly into an order block, right? So that whole drawing I just did is just illustrated for you there. It comes up, it makes a swing low, it makes a lower high, it breaks market structure here, pulls up into what? An order block here. Boom, that's your sell. Stop goes here. That's exactly what you're seeing here, right? A move up, a low form, a lower high, a lower low. That's your break in market structure. Pulled back right into the order block. That's your sell. Your stop either goes above the order block or you go above the swing high that caused the break in market structure, and then it dumps. This and this are the exact same thing. Does that make sense now? For ICT, do you remember? So it's none of it is crypto related, label kills. It's all forex related, but it's all applicable to crypto. I mean, if you're doing his forex stuff, do that. Make sure you go through the Scout Sniper series as well and the Precision Trading Concept series. Everything he has on his YouTube is useful in my opinion, so I would go through it all. I've gone through his free shit probably 5 times. Okay, and I've gone through his paid shit probably 2 or 3 times. Like the amount of ICT shit I've absorbed is insane. Um, yeah, weekly and monthly opens are significant. You tell me if the kill zones aren't significant. So what are the kill zones, right? The kill zones are an hour before and an hour after 12 GMT or midnight, right? Right? So is this not the low of the day that happens right into the London kill zone? This is New York Open right here. So you telling me the kill zones don't work? Have you actually back tested that, or are you just saying that because you saw someone tell you that? London kill zone, low of the day, high of the day into New York, Judas swing, all of that shit just happened right here. So the kill zones definitely work. Maybe they're not as proven in Forex or in crypto, but here's the thing: forget the term kill zone. Just look at market timing, right? Time and price matter. The kill zones are structured around the key trading sessions, the London session, the New York session. So instead of being like, okay, it's the kill zone, just know that there's going to be a likelihood that there's volatility during the London Open, the New York Open. If it's going to be an up day, expect the low of the day to form near London Open and the high of the day to form near New York Open. Shit like that. Don't worry so much about the kill zones. Think about it logically, right? Yeah, if you're watching ICT stuff, make sure to watch it on 1.5x speed at the very least. He can definitely drone on, and if you can't understand his teaching, yeah, like if you watch his free shit and it's like, oh, this is too, he drags it on and he just talks too much and he overcomplicates shit, definitely don't pay for his mentorship because it'll drive you crazy because it's more of the same. I use Oanda for Forex. OANDA. That's what I use for Forex. I use a platform called Questrade. I've also for stocks and commodities. I've also used TD Ameritrade. The reason I like Questrade is because when I signed up for it years ago, you only needed $1,000 to open an account. I think TD Ameritrade is 10 grand minimum. I am long Ethereum. Hey, Chart Vampire, what's going on, bro? I have not seen Crypto Medicated's post because Crypto Medicated blocked me months ago. Um, so I don't know what the article is or what it could be about. Him and I argued about something because he was trying to, I think, talk. Maybe it was about this article. He was talking shit about. Cred, who is one of my good friends, and I was not standing for it. Cred is one of the best people, most honorable stand-up guys who's provided the most fucking content out of anyone in this space. And when he was going at him, I was just like, fuck this guy. And I think he was also a dick to Peter McCormick, who's also a friend of mine, whose like mom or something passed away from cancer, and he was making fun of him for that. So I was like, this guy's a certified piece of shit. Trading journal, like I said, use an Excel spreadsheet. You want to write your shit down. Edgewonk is something you could use. It's good. I mean, it's different, right? Again, it's all Forex related. He uses a lot of horizontals, diagonals, but I mean, the man's a fucking wizard with it. You cannot trade stocks on Oanda in North America. Yeah, TD Ameritrade, just like I said. So Chart Vampire's charts. I can't understand him for the life of me. There's so much shit going on, but clearly the guy is making money, and he's making actionable decisions based on his charts. So if you can do that, I have nothing but respect for you. Trading is very fucking hard. So anyone who is fucking doing it, however they do it, I give props to. There's more than one way to skin a cat. I personally preach price action and horizontals only and no other bullshit. It doesn't mean it's the only way to trade. I know lots of very good traders who use horizontal or diagonals. I know traders who use Ichimoku clouds and other indicators, whatever. If that works for you and you're able to consistently be profitable, fucking more power to you, man. I'm just saying personally, I don't need any of that. His charts have a lot of colors going on. They're pleasing to the eye, I guess, in a sense, but I'm the complete opposite. I like the nice, clean price action. Petico, message Trader Bandit, and he can send it to you. So my thoughts on AJ. So as long as we hold kind of this level, we've got like a nice kind of SR here. As long as we hold above here, I think shorts on any sort of based pair in the yen look good this week. So, I mean, holy shit. Is this Bitcoin or is this fucking a currency? So yeah, I mean, we just broke market structure to the downside. I would love to see price come up into here for a short. That would be the ideal play. I think we'll get it too, right? We just broke high there. I bet you what we see this week, if this level holds here, I bet you this trade will play out, right? I bet you we see something like this, and then you short the fuck out of it on the way back down. Can you chart TRX on MEX? Sure. Oh my god. I mean, I would short the fuck out of this thing. I don't know how much higher it can go, though. Like, oh my God, is this thing done easily at 2x, right? Cunt. Fucking cunt. Do as I say, you stupid thing. Okay. I mean, goddamn. The entire month of December, it's a fucking hell of a move. So, oh my God. So interesting levels, right? I mean, this like it's the price action on this has been relatively clean, right? So, right? These are just the daily chart. I'm just marking the levels, right? So, we've just broken high here. I can't tell you where this thing's going because there's no other levels, but I think a pullback to here is likely, right? And this is going to be your key decision. So this is your decision point, and it's either going to continue up, right? Your break in market structure, that's where you would long it, right there. And your stop here for a continuation. But to me, this move just looks overextended. So if it comes down here, right, what do you wait for? There's your break in market structure, and you could short it down, right? You enter there, and your stop goes there. So that would be where I would watch it. And I would for sure, just based on how powerful this move is if you short it, I would for sure take profit here because it could just fucking bounce again. So that's that. Those would be the levels I'm watching. So I'll leave this on the screen for you for a half second, but that's what I'm thinking here. A pullback at the very least to about 66.60, basically right into these highs, right? And then it's either going to bounce from here. If it does not bounce from 66.60, it's coming back to like 63.30. Okay. Your thoughts on maintaining peak performance as a trader. So I have just recently, as of the start of January, stopped smoking pot and I'm not drinking. I never considered myself an alcoholic. I would I'd like to have a couple beers with wings and watch the game, and then occasionally go out on the weekend. Very rarely would I go out more than one night, though. I'm done the college kind of age partying shit. I'm almost 30, but the weed. I've been smoking weed every day for 12, 13 years now. And I'm a very productive person. I get a lot done. I'm an extremely hard worker, and I'm not really. I'm lazy, but I'm not that lazy. Like I get shit done. But I just figured, I've been smoking for this long. It would be interesting to see what it's like to not be fucking baked all the time. Waking up on a Saturday and the first thing I do is like smoke a joint. So that's been weird for me. But it's been over 2 weeks now, and I'm definitely starting to feel a little sharper. I don't know if that's a placebo effect or if it's actually true, but I feel sharper. I've been hitting the gym. I've been eating well, chicken, rice, broccoli all the fucking time, hitting the gym, not smoking, and it definitely helps. I mean, there is 100% a correlation between your mental and physical well-being and then your trading. When you're trading, it is super, super key to be as unemotional as possible, right? You want to have no emotions in your trading. You want to be robotic. You got to have a system where it's like, if this happens, I do this. And then if this happens, I do this. Simple as that. If emotion gets in the way, that's when you let a winner run too long and then it becomes a loser. That's when you're about to get stopped out, so you close your trade, or you move your stop to break even, only to find out that if you wouldn't have done it, it would have went to your full target. That's emotion. That's greed, holding an altcoin that's up 10x and wanting to hold it to 20x because maybe, and then it goes back down to your entry. That's all greed. Those are all emotions. So I do find that having a good mental state helps with your psychology when it comes to trading. So for me, the no smoking has been good. I've been pretty good with the charts and the trading lately. But for me, I've just felt a little bit more clear, a little bit more sharp. But yeah, big proponent of exercise and also taking time away. If you're staring at the chart 10 hours a day, it's going to fuck you up. Definitely go outside, exercise, do other things, and then regiment yourself. So for me personally, I run a full-time business. I'm an entrepreneur. Um, so I'm very regimented with my trading. I wake up in the morning and I spend an hour looking at the charts and I mark my shit up. And then I have an hour in the middle of the day where I look at charts, and I have an hour at the end of the day where I look at the charts. And other than that, other than occasionally checking on my phone, I try and stay away from it because you can overanalyze, fuck yourself up. Good sleep, super key as well. Can you chart gold and silver? AJ is a great guy. So for those of you that know, I've been long gold since about 1180. I posted it publicly on Twitter. I longed here, basically the Q4 bottom of gold. So to me, I caught this entire move, which was awesome, and I posted it publicly. And I longed silver, sub 1450 as well. Posted that one on Twitter as well. So if you didn't get that, that's your own damn fault. So we're at a very key resistance level here on silver. We're at this weekly order block, right? I like this as an area. It makes sense to me that price is turning around here, right? Because this up move here led to all of the selling that went here, right? So after this up move, we had all basically, other than this little blip, downward price action, right? So it makes sense that most of this got filled back in. And then you throw on your trusty EQ here. Oops. Right? And you get pretty clear rejection from this level. Notice we've never closed through the EQ here. We wicked it. We basically wicked 1300. We're rejecting, we're rejecting, we're rejecting. Huge upper wicks. So to me, this is quite bearish. So I'm expecting a pretty deep pullback here on gold. So this is my upside level of resistance, right? And then I would obviously mark this level here as an area where I would definitely expect a bounce. Arguably, you could mark that as well. I'm not going to because you'll see in a second here. There's another level here. So to me, basically 1280 was kind of my level that I said if we get below 1280, I think that pullback is going to happen. And you can see we're now closing below 1280. So I have another level here that I like. So I'm expecting a pullback. I don't really see anything happening here. We might get a bounce here, but I'm expecting a deep pullback, and I will look for a long here, and then I will definitely look for a long and pile in, right? You have these highs here. You have the weekly order block. You have this area over here. It's a very nice support and resistance area here, about 1250 to 1260. I think would be a reasonable expectation for a pullback on gold. If you're looking to short this thing, I would very much like to see it pull back higher. So I would like to see some sort of, right, because this is just nuked out of here, right? So here's my 1280 level. I got it from basically this cluster of candles here. Right, so there's your low, a high. If we make a lower low here, any pullback you sell. Ideally, though, I would like to see a deeper pullback. Personally, I think we could come up as high as like 1290 before coming down. So my thoughts on gold is it's going to go down. It's either going to drop from here or we're going to see a deeper pullback, which would trap more longs, in my opinion, because I think everyone was uber bullish on gold, right? Typical that everyone on Twitter and everywhere and the news is bullish on gold. I longed it at 1180. Everyone's bullish on gold after a fucking $110 move. Typical, right? So I wouldn't be surprised if we saw a pullback up here before a sell. But either way, I'm looking for sells on gold here going forward, and then I'll be looking to long it between 1250 and 1260. Silver is basically the exact same price action. It just looks shittier already. So kind of like Ethereum does with Bitcoin. This was my kind of equivalent level of 1280. This is it on silver. As you can see, it's already ran away quite far. Right? You have a weekly SR basically. That is a stop price here. See that? See if we can find a cleaner level for you here. That looks like a pretty good level right there. So silver I longed and I closed at like 1560 already. So not surprised here, right? We have this low, right? Support, support, resistance, resistance. We're now dumping off. Same idea though. I'm expecting a pretty decent pullback on silver. Really the first area of support here is back here. $15, right? Round number. So this looks like shit. This looks like it's going to retrace pretty hard. But $15 I think is a good area to potentially look for a long for continuation, right? Because at the end of the day, right, this is bullish market structure, right? This is why I entered silver, right? What is this? This is a swing failure pattern, right? This is a swing high. The swing high broke, right? So an uptrend on the weekly, this is very important, right? If this is the weekly, there is down, right? And then there's up. It's not just a straight line, right? And so if you zoom in on the pullbacks, right? If this is going to go like this, there's going to be areas where it goes down. But the idea is in an uptrend, it goes up more than it goes down. And in a downtrend, it goes down more than it goes up. Sounds super simple. Most people don't understand that. Most people have no understanding of basic market structure at all. Oh, yeah, I'm short this pair, so this is awesome. So I like $15. I also like back into this fucking, I don't think it will come back this far. But it very well could come all the way back down into here, right? And it would still be an uptrend. So you could see price come all the way here. As long as this low holds, we'll see another leg. Okay, we're getting long in the video here, so I'm gonna stop questions after the ones that are already in here, and then I'm gonna go into that little strategy that I talked about that I was gonna share with you guys. The fact that the kill zones don't work well in crypto is not the reason ICT doesn't trade crypto. He has no interest in crypto, and I don't blame him. I think crypto for day trading is dog shit compared to forex, compared to commodities. It's fucking dog shit. Okay, if you want to be a trader, if you're like, I want to be a day trader, I want to be going in and out of the market, crypto is dog shit. The price action is dog shit. The exchanges are dog shit. It's scammy. It's fucking bullshit. It fucking never stops. It will be dead volatility all last week, and then at Friday night at 2 in the morning, it will pump $150 and make the high of the week. And then at Sunday in the Friday, and then Saturday at 2 of the morning, it will dump $300 and make the low of the week. It's an absolute joke. Okay. Beyond that, your account, unless you're trading on like Bitfinex, if you're trading on BitMEX, you own Bitcoin. So let's say you're a trader, you have one Bitcoin on BitMEX. The price of Bitcoin is $4,000. Let's say you're like, I want to take a week off of trading. I'm going to Mexico with my girlfriend. I don't want to look at the charts. You come back and Bitcoin is now at $3,000. You didn't take a single trade, but your account has now lost 25%. It's bullshit, right? So I personally can't stand it. But reason I do it is because I believe that the potential upside is huge in crypto, but I think crypto is much better to be a position trader and an investor. Buying Bitcoin at $4,000 and under, buying Ethereum at $200 and under, buying Ripple at 50 cents and under for 2 or 3 years out from now, you want to be an OG. If you bought at these prices today, as much as maybe Bitcoin goes to $1,000, who gives a fuck? 3 years from now, if it's at $35,000 and you bought it at 3,000, people are gonna be like, "You're an OG." You know what I mean? How do you think Crypto Cobain got rich? You think Crypto Cobain was day trading? Fuck no. Crypto Cobain just bought and sold near the bottom and near the top over and over and over again since like 2009, and now he's worth 100 mil. Okay, so day trading crypto is fucking stupid. Look at the look at the price action. First of all, look at this. What the fuck is this? Okay, that's the monthly chart. Look at how much nicer this is to trade. Right? There's more defined ranges. There's more shit you can trade, right? Like this is a huge range and this is a huge range. This is a huge ranging market for years that you can trade the top to the bottom, the top to the bottom. Bitcoin, its entire market cycle, it's like it's going up here and now it's going down, right? So you look for longs, now you're looking for shorts. It's fucking dog shit. So ask me how I really feel though. So if you want to be a day trader and you want to be in and out and shit, I suggest you start learning to trade Forex. I'm telling you, the levels work better. The price action is cleaner. It's easier to trade. There's so many pairs that if you're like, okay, well, there's no trade for me on the US CAD today, okay, I'll try the Euro USD, or I'll try the Aussie dollar, or I'll try the cable, I'll try this, I'll try that. Because there's so many pairs, you're gonna find a trade. I only focus on 4 Forex pairs, really. US CAD, Euro USD, the Aussie dollar, the cable, which is JPB USD, and occasionally JBB JPY, which is called the Beast. It's the pound yen. That's it. There's always a trade every single day in one of those pairs, and I don't even trade every single day. I take just cherry pick setups I like. The price action works so well. Price comes right into my order block perfectly and I can sell it. You know, I draw a support and resistance level. I can set a blind order and it will respect it perfectly. I can find the high time frame bias. Okay, this is clearly an uptrend on the weekly. I'm only going to look for longs. Right? Like it's simple as that, but the problem is people learn about trading in crypto, and usually during a bull market, so they have this emotional attachment to crypto and to the money that they cannot get rid of because maybe they bought a coin that did 100x and it made them like 5 grand turn into 100 grand, and if they're lucky, they cashed out. Most of them didn't. So now they're emotionally invested and they don't realize there's other markets with other opportunities out there that they could be applying the same skills in that are going to fuck you. If I don't want to trade Forex for a month, I can just close my charts, not look at them for a month, and I can come back a month later and the $10,000 I had in my Forex account is still worth $10,000. So I'm much more of a believer in investing in crypto and trading Forex, but that's my rant on that. You know, people are greedy. People get rich quick in crypto, and they think that they can do it again. When in reality, a period of time to get rich quick is not that long, and you got to be pretty damn lucky to sell at the right time and not get wrecked the entire bear market. Like most people are getting fucked. 99% of people on crypto Twitter are losing money. I guarantee you that. Most people are fucked. Most people suck. Most people would have been better off just buying crypto and then just holding it and then selling it, when it's going straight up. And then when it's down here again, just buying it and then selling it again. Most people would be better off doing that. But people want to become traders because a lot of people come to crypto are gamblers. They are degenerate. They have this like, oh, I want to get rich quick. It's the wrong attitude. It's a surefire way to not last long in the space. But it is what it is. I understand. As much as I'm ranting about this, I understand because I was there. I was there in 2013-14. Trust me, I lost all of my money. I quit my job. I was like, I'm going to be a fucking day trader, mom and dad. I had like a sick job at the bank as a financial advisor. I was like 20, 2003, I was like on my way to like a very good career there, and I was like, fuck that shit, crypto. And it didn't work out very well. But I learned how to trade, and I learned that there's markets I can trade that are not fucking bullshit like this. So for me, the reason I'm so involved in the community is, I like the community aspect of it, but I made some great friends. But I know that, in my opinion, at least, I don't know for sure, if I bought Ethereum right now at $118, I'm pretty confident 2 to 3 years from now, it's going to be worth more than $118. So to me, pretty good investment. The potential upside is huge. The risk, it might go to zero. Fuck it, right? So if you want to be a trader, I would say start focusing on other markets, not crypto. So that's my rant there for you, labor kills. ICT has Forex figured out, and he can consistently pull out money out of the market. Why fuck with another market when you've already mastered that, right? So, I understand where people come from when they want to be traders and they're addicted to crypto and shit. But I'm telling you, it's like it's not easy to trade as is, and to try and trade when you learned how to trade in this, and then you're like, okay, well, how do I short now? Right? What do I do when it's going down? So it fucks you to learn to trade in this market. And, it's funny, right? Everyone has this, there's the collective meme, right? Like, oh, everyone's wrecked, right? I like saying wrecked too. It's funny. Everyone's wrecked. Well, guess what? Trading is a zero-sum game. So for every time someone buys, that means someone is on, there's a counterparty to that trade. Someone is selling, okay? So there is a person or an entity that bought a Bitcoin at $20,093, and someone sold it at $20,093. And then the person who bought it at $20,093, they thought it's worth $21,000, so they put a sell order for 21, and then no one buys it. So then they put it at 20,500, no one buys it. And then they put it at 20,000. Now they're underwater. No one buys it. Then they put it at 19,000, right? And that's how price starts cascading back down, right? Because there's no more demand, right? The demand has dried up. So there's no more buyers there. So they have to keep lowering the price. And that's why you see these parabolic moves crash so quickly, because that fucking person who bought it up here is like, holy shit, I thought this was worth 25 grand. I thought it was just going to keep going up. And now they're fucked. So it's a zero-sum game. And so what's important to understand about that is it means not everyone is getting wrecked. You getting wrecked is someone else making money. So someone who bought this retracement, right? We're in a bear market. This retracement here, this is for selling, not for buying. But someone who bought here, someone is shorting into that person's buying or covering. And then the person who bought it, who shorted down here, that person up here is covering their short, right? So for every person getting wrecked here, someone is making money. Every person getting wrecked here, someone is making money. So we're not all wrecked. Not everyone is wrecked. Most people are wrecked, but all of those people getting wrecked are counterparty to someone making money and not getting wrecked, doing the complete opposite. Ask me if I'm passionate. Are you worried about LeBron's injury? Of course I'm fucking worried. He's fucking 34 years old. He's in his 16th year. He's played the equivalent of 3 extra seasons of playoff games. He's never missed this many games before. The Lakers are not in playoff position, and I'm very scared, and I don't like that he's not playing, because we just played Oklahoma, Houston, and Golden State with no LeBron. It's like, what the fuck? Thanks, Gene. 100% agree with you. Risk management, number 1. Psychology, number 2. TA is 3rd. You can put someone who has extremely good risk management. You look at a guy like Flood, and Flood gets a lot of flack. A lot of people hate on Flood because he makes these obnoxious calls. He's rude to people, blah, blah, blah. Here's the thing about Flood. Flood doesn't give a fuck what you think about him. So that's why he's better than you, number 1. And number two, he has enough money that none of that shit matters. Like people like, oh, Flood was long here, he got wrecked. It's like, dude, Flood has a better understanding of risk management than almost anyone I know in crypto Twitter. So I'm very confident that regardless of whether or not he gets shit wrong, he's making money. Because with good risk management, you only have to be right about 30% of the time to be profitable. That's not that much. That's 1 out of 3 trades. That's even less than 1 out of 3 trades. That's 3 out of 10. 3 out of 10, and you can be profitable. So you could put someone who's not that great at TA but has super sound risk management, and I guarantee you they will out trade your fucking local TA artist on crypto Twitter. I'm no longer in it. I am done it. And I think it's great. I would start with his free stuff, and if you like his free stuff, it's more of the same, just more in depth and more comprehensive. If you watched his free stuff and you're like, yo, this is too much, don't do the mentorship. If I said it wrong, that's what I mean. Right? If the JPYX is bullish, any pair based against the JPY would look good for shorts. Can I chart NPXSF? Why the fuck would you be trading that right now? Oh my god. Y'all are fucking crazy, guys. PundiX Ethereum. I mean, this looks like dog shit. Is there more history here? That looks even worse. The fact that anyone is trading this right now is fucking mind-blowing to me. Okay, so there's absolutely no information on the weekly. I would mark these lows. That's your next resistance. I would mark this level here. So this looks like it's coming into resistance right now. And where is it going to pull back to? Look at this high. Basically this order block right here. This is where you want this thing to bounce. So if this thing pulls back, this is where you want it to bounce. If it doesn't bounce here, it's going all the way back to the low. It's going all the way back here. You guys remember breakers? Up candle before the down move that took out the swing low? There's a perfect breaker example, right? Down, nuked, you buy the retest. So this is what I would be watching. This area here is super key. This is your first level of resistance. If it goes through there, you've got some fucking blue sky. How long till I was profitable? Definitely over 2 years. I would say in year 3, I've been doing it for over 6 years now. In year 3, I was consistently able to make money. So I knew what I was looking for. When I would open up the charts, I was like, this is what I'm looking for. I knew what I was looking for. I knew how to enter. I knew where to place my stop, and how to manage the trade, but I didn't have my mental game locked down. I still made dumb mistakes, like I would force trades. I would chase moves. I would get emotional if if it started going against me, I'd stop it out early. And I still do that sometimes. I'm not perfect. But I had a lot of those issues. Those were my biggest issues. The trading part I had pretty well dialed in, but it was the emotional mental game that I was still struggling with halfway through year 3. And then, definitely after year 3, I would consider myself, very much proficient and profitable. Smoke weed every day, bro. Woo. Jesus Christ. Okay, no more questions, guys. We're never going to get to the strategy I'm trying to show you guys. It's 9:15 here. I got to be done soon. I'll hold forex positions over the weekend and holidays and shit like that, and overnight. There's I can't remember, they're called holding fees or something like that. It's kind of like funding. Um, so I mean, shit happens, but you take it into account in your trade, just like if you're taking a long and there's funding on BitMEX and you want to know if it's paying longs or shorts before you enter a long, right? So whether or not you should enter on the swaps or the futures, you should know. I do. I'm in a lot of position trades, right? I'm in long-term trades. Like I'm in an odd an Aussie dollar trade that I've been in for 3 weeks now. Okay, so I'm not a full-time trader. I own a recruitment business that I've been running for 3 years. And the reason I won't stop is A, I work with my best friends. B, a lot of people get into trading because they want freedom, right? They get into trading because they don't want to work 9 to 5. They don't want to have a boss. They want to be able to do whatever they want, make their own hours. At the end of the day, you see these fucking Instagram pages and these people flaunting like, oh, I'm trading from a beach today and I'm trading from here today. Real traders aren't doing that. Okay. I'm telling you that right now. Real traders, they treat their trading like a business. They're up when the market opens and they're at the desk paying attention. They treat it like a real business. If you want to be successful in this game long term, you have to treat it like a business. Okay. Ask any successful online poker player. They treat it like a business. So all that shit is phony that you see online. But people want freedom. That's what they crave. With trading, I already have that. I'm self-employed. I own my own business, so I already can make my own hours. I have staff. I can take time off if I want. My money there's risk in being an entrepreneur. It's not risk-free, but I have an established business at this point where I don't need to worry about my bills getting paid. Being a full-time trader is hard. I've done it before. You have to have a pretty big stack, right? Think about it. If your bills are $3,000 a month, rent, utilities, food, blah, entertainment, $3,000 a month, okay? And you have a $10,000 trading account, okay? You have to make 30% on that to just cover your bills, right? That's a lot every single month. That's a lot of pressure. You need a bigger stack than that if you want to be doing this full time. So if anyone is looking to trade full time, I would suggest you have at least 1 year's expenses saved in the bank. So rent, everything. So maybe like 30, 40 grand. And then you have at least like a 10,000 or bigger account minimum. So my business is, I make more money in my business that I run than most than I really could want to make trading. Like I would have to risk a lot of money trading to make what I make with my business. So for me, you can do both, man. I trade on the 4-hour chart. I only need to look at the chart twice a day. So why not have multiple streams of income? Anyone who's like, oh, I trade full time and that's it. It's like, okay, well, why, if you have an opportunity to do something else and also make additional money, why not? Right? Your psychology will change if you're trading full time and you don't really have enough money to be doing it or experience. That's what happened to me when I first tried it. Is I was like, oh shit, my rent is due and I don't want to take money out of my trading account, so I need to make some trades and make some money so I can pay bills, right? And that's gonna fuck you up. Um, if I'm gonna short gold, am I gonna hedge it? Yes, exactly. I'm short the US CAD right now. I'm expecting some downside here. I'm short from here. So technically I'm underwater right now, but I'm expecting a move down to like 1.31. That's my target here. So I'm short right now on the US CAD. No more questions, guys. I got to get to this. Yeah, I'm the same way. Okay, but you can 1x short, but then what happens if it goes up? Right? What happens if it was 4,000, right? Like, let's say you 1x short because you're like, I'm going away for the weekend. And then you come back to find out that Bitcoin's now at $5,000. It doesn't solve the problem at all. If you still have to be active all the time is the point I'm making. Trust me. 1x short makes sense if it's going down. There's just so I understand what you're saying. A 1x short, your USD value will stay the same. I'm not disagreeing there, but you then own less Bitcoin, right? And if you're in crypto, you want to own more Bitcoin. So just because your US dollar amount is staying the same, you are now missing out. You're going to be pissed and be like, "Oh shit, well now Bitcoin is worth this. Ethereum pumped, this fucking happened, that fucking happened," because you're not based in a currency, you're based in Bitcoin. So yes, you can 1x short and you will have a flat position. Your US dollar amount will stay the same. Sure, I don't want to gain US dollars when I'm trading crypto. I wanted to gain Bitcoin. Not yet. I'm looking to short the SPX, but I'm not short it yet. I am short odd USD from like 72 from here. I shorted this pullback and I'm targeting like down here. Okay, holy shit. So an hour and 40 minutes into the video, and I haven't even fucking talked about the main thing I want to talk about. So here is a very quick strategy that I'm going to share with you guys on how to actually enter an actionable trade based on just support and resistance without using any fucking order blocks, any fucking indicators, anything like that. So we'll use the Euro USD for an example. So when you want to enter a trade, the best kind of trade you can enter is one that is hinging off a high time frame level, okay? So in this example here, we have this range that is formed on Euro USD, right? Price is in a range. We want to I'm showing you this in hindsight, okay? But hindsight is how you learn. So imagine none of this has happened yet. Okay? Once I show you this, you can go practice it in hindsight and then try and apply it in foresight. So here, one sec. I'm going to just start the oven because I haven't even eaten dinner. I'm just going to start the oven. I'm going to preheat it. I'll be right back. All right, you guys still with me? Okay. I'm making. I'm making. You're a little late there, Livercoin. You're liverless, aren't you? I fucking miss you, bro. Um, okay, so I'm making chicken. I'm making rice. I'm making carrots. I'm making broccoli. I'm on that fucking healthy food gang shit. Okay, so we have price in a range here. So imagine none of this shit has happened yet. And this is going to be a swing trade example. So let's say that we want to enter a long or short once price breaks out of this range. So we're on the weekly chart. So what you're going to do is you're going to mark the SR level here. This is the weekly level that's capping price. So if we get a weekly close above this level, that is our sign that we are going to look for a trade. So we're waiting, no trade here. This is years happening, right? But I'm just saying, you're not going to be sitting here since 2015 just watching this shit, right? But you can have this level marked, and then if you're a trader, every time price came up to this, right, you know that when this level breaks to the upside or this level breaks to the downside, there's going to be a trend forming. That's going to be a long-term trend, right? Or at least, a significant move, right? Like when this level breaks, that's 1,000 pips. That's a fucking big move. Okay. So anyways, you're waiting, boom, it happens. So we now have a high time frame level here that has been closed above. So what do? You now zoom in. We're now going to go down to the daily. Okay. And what you'll see is market structure. Notice that, let's see, what week did it break? So it broke the 10th of July. So the 16th of July, it closed above our key level. Right here. But notice on the daily, it actually closed above before, right? So price action shifts on the daily first, right? So the daily chart very clearly in an uptrend already. But we now have a high time frame level that is closed above, signaling we are now looking for longs, right? So when this happens, boom, your weekly candle closes above. We're now looking for longs. So the next thing you're going to do, imagine none of this has happened. Okay. The weekly has now closed above. The next thing you're going to do is look for a setup to form. So the two things you're going to want to see are a swing high get broken. So that would be a continuation in market structure, right? So here's your swing high. This is also a swing high, but I'm going to use this one. We want to see the swing high level broken. Okay? That is your entry. And then your risk can be based on either the swing low that caused the break in market structure or the candle that broke market structure. You can put the stop below there. The reason I like this level is because look what we had here. We had lows here that were swept, right? So if I zoom in, see how we had this swing low swept here, right? So the reason I like that is where my stop goes. Is because to me, if this level gets violated, I'm clearly wrong. Because the stops, the low here has already been run and we closed back above the level. So to me, if this level breaks, if this low gets broken, I'm wrong. It's going back down. So our trigger is the weekly has now closed above our key high time frame level. That's here. Okay, so step one, identify key high time frame level. Okay. Step two, invalidate target. So where are we targeting now? So I'm saying, okay, we've closed above here on the weekly. I'm now looking for longs. Where am I targeting? You look left, right? So where could we be targeting here? Well, there's highs here, right? This would be a target. Look at how perfectly that happens anyways, right? There's a gap fill here, right? There's an order block up here. This would be a good target. right? Maybe a swing high up here. Right? This is the weekly chart, right? So that's why these targets are so far away. Okay, these would all be suitable potential upside targets, right? You're gonna go back to the daily. And remember, none of this shit has happened yet. We're here. Okay, so my weekly has now closed above. I come to the daily, okay, I zoom in. I find my invalidation level. Another word for a stop, okay? Well, my stop is here. This low's already been swept. If this low gives up, I'm wrong. Okay? Next, you're looking for break in market structure that occurs off the key high time frame level. Okay? That's that level I marked there for you. Now your entry is going to be once we close through this swing high. So my stop is here, that's defined. My first target is right here. So now my next thing to figure out is going to be my entry. So my entry is going to be a daily close through my level. Once the daily closes through here, boom. Shit entry if you enter there, right? But it is what it is. You can enter immediately once this daily candle closes through here, or you can wait for some sort of pullback towards the level that broke market structure. So there's a couple ways to enter this, right? The low risk, enter on daily close. So enter on daily close through MS break level. That would be your low risk. And the reason it's low risk is because you have, this would be your high risk, excuse me. The reason it's high risk is because just because the daily is close through there, it does not mean it's for sure going to just continue to nuke up. It could pull back deeper, and then all of a sudden you have a shitty entry. Right? So that's one entry, that's one way. Wait for confirmation, pull back to MS break level or OB. So ideally, right, we would like to see what? The dream entry is for here's your break in market structure, pull back to the order block here, right? That's the dream entry. You might not always get it. It might just go from here. You don't know, right? So either of those entries is valid. Look at what happens here. Perfect pullback right into the market structure break level. So on any of these candles, you could have entered, okay? The other option is zoom in for more refined entry. Right? You're zooming in. You can find an entry earlier. So instead of waiting, I don't know if it's going to, it will. So now instead of waiting for the daily candle to close through the market structure level, I can enter here on the 4-hour close. Right? Or I enter here. Or better yet, I've zoomed in and now I can say, this is the daily swing high. Well, look at this swing high on the 4-hour. As soon as it closes through this level, I'm just going to enter. My stop is defined, right? I'm wrong here. I'm wrong if this low goes. Does that make sense so far? So literally, you wait for the high time frame close above the level, and then you zoom into the daily or the 4-hour, you find a swing high, and then once market structure breaks on that time frame, you enter. Boom, I enter on this candle right here. Right? Or I enter on this candle here. right? Or you can wait for the pullback here. The dream entry is it pulls back to this order block, right? But it didn't, but it pulled back to the level that it broke market structure with. That's very common. You'll see a lot of people who trade order blocks, and what they do is they fuck up because they say, okay, well, I want it to come back here. That's where I'm going to enter, and it never comes back there. But it very often will retest the level that broke market structure. Okay, so boom, that's your entry on the 4 hour, or here if you're taking this level. Now that you're in the trade, right? It's not a 2-to-1. 2-to-1 is ideal, right? But you can take a 1-to-1 or a slightly better to 1-to-1 if you're on, if you're in trend with the high time frame. We just broke and closed above a key weekly level, so I'm okay taking a less than 2-to-1 trade because I am in context and the same direction as the high time frame. Okay. Either of those are your entry, and so then here's what you do. This is my stop here. We broke market structure. I'm in this trade, okay? And I'm targeting way up there. We might not get there. Who knows, right? But now we break through here, right? So imagine time is passing, right? You entered here. We now break through market structure again. I'm now going to move my stop up below this low, the low that led to the market structure break, okay? And that's how you can stay in the position. We now have a new swing high. We broke it there. So I'm going to put my stop up here. We've now also hit our first profit objective, right? You're taking some off. You could now re-add some. Okay, we have another market structure shift here. Stop trails here. You have another market structure shift here. You could trail your stop up here. And if you're taking profit on the way up on these pullbacks that happen, this is when you can be adding to your position and stacking, right? And scaling in as you scale out. And you can just ride this thing up, right? Here's another market structure shift. Boom, I'm taken out of the position. So I didn't catch the entire move, right? But I caught, let's say I entered on this candle, 300 pips. And even though my initial profit target was only a 1.25 to 1, since I am now in trend with the high time frame and I'm trailing my stop up as we continue to break market structure, as long as we keep making higher highs and higher lows, it's bullish. So I'm just going to continue to long and trail my stop up. And overall, even though initially I was only aiming for a 1.25 to 1, my initial risk was here and I ended up getting 300 pips. So that's a very easy way, right? And then look, I'm stopped out, but we're still high time frame bullish on this pair, right? So I can mark this, right? Or what you do here, let's say you get stopped out here. Okay, well now what do I have? I can mark SR, right? Let's find SR again. There's a nice SR level, right? Then I'll wait. We're respecting the SR level. There's my market structure. Soon as we close through it, I can enter along, right? Exact same scenario here. Look at this. Do you not see this low? The low is swept into a level, an SR level, and then it closes above. There's my risk. Oops. There's my risk. We break market structure. As soon as we close through that candle, I could enter right there. And there's my stop. And where am I targeting? I'm targeting up here initially, right? And look, all of a sudden, we're getting damn close to that level. We never get there. Oh, yeah, we actually do. Sorry. Definitely do. You're back in, right? So you're back in. Breaks market structure, you enter. Here's your new swing high. As soon as it breaks market structure there, you can now trail your stop up again. Now you have a new swing high here. Maybe you're scaling some off, right? You look left, you're scaling some off. We break market structure there. You can move your stop up to here. Right? You get stopped out again. No big deal. It comes back down. You don't trade any of this, right? You're looking for longs. You don't worry about this down move. Look, right back into your support and resistance level. Exact same scenario. You have a low that was swept. There goes your stop, right? Mark out your high. As soon as the 4-hour closes through here, you buy it. The only reason I just keep buying it here on breaks in market structure is because we are high time frame bullish because we broke that key weekly level, right? So I'm expecting some expansion to the upside. Boom, I buy it right there. There's my stop. Comes down, right? Here's the next significant swing high. I'm not moving my stop until that swing high gets broken. Boom, you're stopped out. It's okay. You wait. And then look where price came back down to. Came back down to that old SR level, right? So you get this move here, and then you're stopped out, and then you're out. Exact same scenario again, right? You have a low here, price breaks below that low, and then it rallies away. Mark the swing high. You could use this swing high. You could also just use this one. This is not a great entry, but whatever. Your stop is here. You've entered here. You're targeting these highs previously, right? We continue up. You move up your level here. Here's your new swing high. That gets broken here. So now you can move your stop up here. Right? You're scaling off at previous highs. You have a new swing high. Doesn't get broken, so your stop stays. You don't get stopped out in this instance. You're still in. Right? You're still in. Boom. There's your break of that swing high. Now you've trailed your stop up to here, let's say, right? The swing low before that swing high was broken. Lo and behold, it continues to go up. There's a new swing high that's been made. That gets broken here. You can now trail your stop up to here. And look at this. We've now hit that fucking target that I set way the fuck back here. Right? Remember this fucking target I set way back here? We now finally hit that. But look at all that fucking up move that you caught with very defined risk reward the entire way up. You trail your stop, right? There's a new swing high. You can trail your stop. There's a new swing high. Arguably, it got broken. Let's say you trailed your stop. You got stopped out. It's going down. You don't worry about it. Where's it come down to? It comes back down to a key SR level. Same fucking shit over and fucking over again, right? You mark out a swing high. You could have marked out this one. You could have longed it. Put your stop down here. This instance, you got stopped again. You're not interested in the down move. You're only looking for the up. Right? So at this point, here's that weekly range here. We have now broken back below that weekly range. So I might stop looking for longs on this pair, but look at all of that up move that you were able to capture here. Right? A solid 300 pips, multiple trades, up and down, up and down, up and down, trailing your stop up the entire way. So that's a very basic way that you can enter trades just based on SR, right? You mark your high time frame level, identify targets, decide where your stop's going to go, wait for there to be a break in market structure near that high time frame level. As soon as the candle closes through, you enter, or you wait for a pullback, or you zoom in, and then you can just trail your stop up. And as long as it continues to make highs or lows, if you're shorting, you just continue to enter on any one of those market structure breaks. Does that make sense to everyone? I'm going to end the stream here, guys. This has been my longest one ever, 2 fucking hours. Holy shit. But I feel like it was good and productive. Did any of that last fucking 15 minutes make sense to anyone? All right, awesome. So go back and back test that, okay? This shit works incredibly well, right? Incredibly well. Look, the exact same thing here. And this is no order blocks, no fucking indicators. Okay, this is just price action, just support and resistance. Look at this. There's our same exact scenario here, right? We broke high of this level. We have the high time frame range. We broke above it here. There's your swing high. You enter on this candle. Your stop goes here. Okay? Another swing high. We broke above it. You could trail your stop up now. Right? Another swing high. We broke above it. You could trail your stop up. Another swing high. Broke above it. You could trail your stop up. Maybe you get knocked out here. Who cares? Break of this swing high. You enter. Stop goes here. You enter right here. Right? You entered here. That's not the best entry. Everyone's like, oh, you got to enter here. It's like, do I really care? Look at how much further it went up from my entry. 250 pips. So yeah, I didn't catch this fucking first 150, but I got a lot of it, and I'm trailing my stop the entire way, right? So you got stopped out here, you mark the swing high, we broke above the swing high, you enter again. You're underwater for a bit. You're underwater. Right? You're underwater, but eventually, look, new swing high here gets broken. You've now trailed your stop. You're now every time you trail your stop, you're locking in profits. New swing high. You're still in this trade. It breaks there. Now look at how tight your risk is. You're catching that entire move. Now you're marking this swing high. You get stopped out. And you're done. You're waiting. Look, it goes back to that key support and resistance level. And we're now back above it. Exact same fucking shit. Mark the swing high. We're back above the key support and resistance level. Here's a swing high. You could enter on this candle right here. Here's your stop run. This low should hold. Right? This low should hold. You enter here. It's continuing to make market structure. You don't even get stopped out here. And look, it just continues to break highs. You could enter and pull back on any of these pullbacks in these breaks in market structure. You enter on them. Why? We're above that key weekly level, and we're making bullish market structure. So you're just hunting longs, right? And look at how much fucking time you had to get in longs here. And then it breaks below, and then it's back above it again. You're looking for longs. Comes back to it, you're back looking for longs. I mean, this is an amazing example. Here's your key swing high, let's say. Soon as you break above that, you enter. Right? And we're continually making new highs. So no order blocks, no fancy bullshit, just market structure and fucking support and resistance. Yes, everything will be on YouTube. All right, guys. Thank you very much. That was a long one. Not exactly like the Monday high-low strategy at all. Appreciate you guys sticking around for 2 hours of me rambling. Hopefully it was of some value to you. This will be on YouTube for all of you guys to see. But yeah, I gotta eat. I gotta get some rest. But thank you very much, guys. We'll talk to y'all soon.